One of my favorite things to do to evaluate a company is to hear what the management team thinks about the company's performance in the most recent quarter, and especially what the CFO about the company thinks about the performance in the most recently completed quarter. The CEO, don't get me wrong, it's important to listen what the CEO says about the performance, but the CEO usually includes some form of salesmanship, some form of hyping up the company regardless of what the performance was. It's kind of their job to talk about the positives about the business, whereas the CFO of a company usually provides more factual information and allows me to analyze a company based on the information without all the extra salesmanship that can get in the way of the facts of what's going on. So that's what I'll do here. I'm going to share with you what the CFO of Micron Technology said about the company's most recently completed quarter.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the CFO said for the full year, they achieved record revenue of $37.4 billion, which was up 49% year over year. And the gross profit margins expanded to 41%, which was a 17 percentage point improvement from fiscal year 2024. Certainly, the company is bouncing back from lows, and you can understand why Micron's stock price was up roughly 100% before the company announced earnings. And of course, I was happy about that because I've had Micron stock rated as a buy all year long in 2025. I had it rated as a buy in 2024 too. Remember, in 2024, Micron's performance was struggling to get off the ground. And in my comment section, I would often have viewers saying, man, what's going on with Micron? Why isn't the stock performing? Do you still like the company? And I kept reiterating that buy recommendation on Micron. I saw the upcoming performance. I liked where the company was going. I liked its position in the artificial intelligence build out of these data centers optimized for artificial intelligence, and Micron's position in that industry, partnership with NVIDIA, and the effectiveness of its manufacturing capabilities, all of which were working good. For the fourth quarter, the CFO said revenue came in at $11.3 billion, which is up 22%. And up 46% year over year, 22% from the previous quarter, 46% year over year. So for the full year in 2025, their fiscal year 2025 revenue was up 49%. In the most recent quarter, revenue was up 46%. So there is some deceleration in their revenue growth. And I wouldn't expect Micron to generate revenue growth of 40% for any longer term period, but for short term bursts, this company is good for some of these where its revenue explodes. It's a very cyclical business, and you're seeing the cyclicality working in Micron's favor right now. By the way, if you want to follow along, this highlighted document I'm reading from is the company's most recently completed quarterly conference call with Wall Street analyst. I've made this my highlighted conference call transcript available for my channel members if you want to follow along with my highlights, and you can join my channel for less than $5 a month. See the link in the description for all the benefits you get for joining our channel. So Micron reports its business two different segments overall. You have the DRAM segment, which is memory, and then you have the NAND segment, which is storage. Of the two, the DRAM segment is the one that's performing much better. It's now making up a larger percentage of its business overall. The CFO saying fiscal Q4 DRAM revenue came in record $9 billion. That was up 69% year over year, and it now represents 79% of total revenue. As an investor, I would rather own a business that's more focused on DRAM rather than NAND, because DRAM is the component that's going into these data centers optimized for AI more significantly than storage. Storage is important too, but it looks like DRAM is a more critical factor, a more critical component, and demand is increasing for these components more so than for storage. So bit shipments increased in the low teens percentage, and low teens is 11%, 12%, 13%, somewhere around that range, driven by strong demand across all end markets. Prices increased in the low double-digit percentage, driven by tight supply and favorable mix. That's a great position to be in, where you have an industry where demand is increasing and supply is tight. That allows you to increase prices and generate higher average selling prices because you're not competing against all of this supply that's in the market. That's great to hear. However, storage fiscal Q4 NAND revenue of $2.3 billion was down 5% year over year. Shipments declined in the mid-single digit percentage, but prices increased in the high single digit. So as I mentioned, the RAM or memory business doing much better than the storage business, and it's good for Micron investors that a larger percentage of its business now consists of the memory business and less of the storage business. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.